The St. Louis Local Development Company, regular board meeting on Thursday, November 13th. It's 3:02. Can we have a roll call, please? Are you on mute? I'm not hearing the roll call.
Is Janet there, Celise?
I'm here. Director Rabu,
Here.
Director Johnson,
Present.
Director Gleek,
Here.
Director McCreary,
You're on mute, Dave.
Dave, can you unmute? Dave, you want to try and sign off and come back in?
Director Sites is in the attendee, so I'm gonna promote him too, so he could speak.
Okay.
Thank you. Okay, we're in the middle of a roll call, so we want to try.
And so you, oh, there he goes.
Can you hear me now?
Yes,
All right. Sorry about that.
well, we're doing roll call, so Director Sites
Here.
and Chair Gilbert.
Here. Thank you. Hopefully Dave can get his sound straight so he can join us. So we are called to order and we've had a roll call. The next item on the agenda is approval of the minutes of our September 11th regular board meeting. Those were distributed. Are there any questions or changes? If not, is there a motion to approve?
So moved. Director Gleek.
Second, Director Review.
Been properly moved and seconded. Will you poll the board, please?
Director Rabu,
Aye.
Director Johnson,
She gives us a thumbs up.
okay,
Present. Yes,
Director-
aye.
okay. Director Gleek,
Aye.
Director McCreary, Director Sites,
Aye.
Chair Gilbert.
Aye. The motion passes. Next on the agenda is Resolution 25 LDC 11, approving a loan to Celadine LLC for the benefit of Wild Ginger Weddings. Roger, this is you.
Okay, yes.
Hey, before you get started, did you guys hear that Don Reeves had a stroke? That's why he's not here. Did anybody hear that?
Oh, didn't.
No.
No. Okay. I just got it. That's why I was late. I got it. I got a response to my email and it was his wife and I didn't get any details. He just said he's in the hospital. He had a stroke and he won't be able to attend the meeting.
Well,
Okay, that's-
understandable.
Okay.
Thank you for letting us know. We'll have to follow up to see what we can find out.
You got it.
Thank Okay. All right. Roger?
Okay, the resolution seeks approval of an SBA 504 loan in the amount of $173,000 to Celandine LLC for the benefit of Wild Ginger Weddings LLC for the purchase of the property located at 6020 Southwest Avenue. Both companies are owned by Carol Cosgrove Payne. The building will house Wild Ginger Weddings LLC wedding floral design business. The SBA 504 will have a term of 25 years and an interest rate to be determined by the debenture sale. The loan will be secured by a second deed of trust on Southwest Avenue property. It will be guaranteed by Carolyn Cosgrove Payne and Amy L. Witt. A collateral assignment of life insurance will be required on the life of Ms. Payne. The total cost of the project would be $415,000. Additional financing for the project in the amount of $207,500 will be provided by Lindell Bank, with the borrower contribution being $41,500 to the project. The company seeks to create one new full-time equivalent job in the next 2 years. The building will really do two things. One, it'll help them in their conversion rate of customers. And then number two, it'll help them with their average spending per customer, meaning they'll have a more profitable business. So anyway, we request the approval of this resolution. Did you want Carolyn to talk now or? That'd probably be, I guess, the best idea. Anyway,
Yeah.
Carolyn Payne, if you could go ahead and maybe just kind of describe your business and you know, what this building will do for you.
Hi, everyone. Can you hear me okay?
Yes.
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 Hi, I'm Carolyn Cosgrove Payne. I am a wedding florist. I have been creating floral designs for weddings for the past 8 years out of my garage. I live in St. Louis City. We focus on sustainable and locally grown wedding flowers. So we work with local growers to source flowers, and we work in a style of design that is not typical for wedding flowers, a little more wild, a little more natural looking, and a little more artistic. So we have been growing in recent years, and we expect to grow more. As our customer base has changed, people want to come and see the flowers and see what kinds of rentals we offer. And you can imagine that my garage is not the most wonderful place to host clients who are looking to spend more on wedding flowers. So my goal for this building and the great opportunity that it would present is we'd be able to have a truly welcoming space for customers, to have a more in-person, a more personal feeling sales process, help customers feel more comfortable choosing us to be their wedding vendor. And we believe this will also allow us to create some new revenue streams as well.
Any questions for
questions?
Carolyn? Oh, go ahead.
I do have a question, and apologies if this is written somewhere. It seems like, and I may be looking at the wrong place, so a significant escalation, like growth from 68 to 120 to 220. It's like, would you say you're only able to serve about half of your customers now? Is like, seems like a significant jump in revenue forecast.
I don't think it's 68. I think it's 98 to, I don't think that is the right number.
The 68 is the 7 months for 25. So it's
That's
a part
right. Got it.
So we're at I think 120 now. So it is a jump for us. We do have a significant, we have, like any business, there are customers we write proposals for who choose to go with other vendors. And we believe that by increasing our rate of customer acceptance from right now, about half of our proposals are accepted to about closer to 2/3. And that has a lot to do with customer trust and confidence. I think more people would feel comfortable saying yes.
Will you be adding to staff as you grow? How will you handle the additional, or is half the work just the proposal? How do you staff the weddings then?
Yeah, so in the floral industry, we frequently use freelance floral designers for busy wedding weeks, because you can imagine that it's very seasonal, and even within the season, we don't need 20 hours of help every week. It depends on the event. So we already have that help built into our cost of goods. So it's really dependent on weddings. We have a little bit of administrative support right now. And that may increase depending on what direction we decide to do, but I don't think that we would add like, I think our spending on staffing would be consistent with our current percentages.
Okay.
You know, we had talked about this a little earlier, and it's really, she may add some people on. She really, on the 504, if you're a minority or a woman, you really don't have to add any more jobs to do a 504 project. So there isn't that jobs requirement. So anyway, I think she will as she grows, you know, eventually. So
Right. And I suppose with the freelance, you're able to price that in if it's a larger wedding or, you know, you have two on the same weekend, you're able to take that into consideration
Exactly.
in your pricing.
Exactly. So that is priced in at the front end.
Okay, cool. Thank you.
Any other questions? Hmm. If not, is there a motion?
So moved.
Motion to. Is there a
I'll-
second?
I'll second it. Ann, please.
It's been moved by Director Sites, seconded by Director Bleed. Excuse me. Can we poll the board, please?
Director Rabu,
Aye.
Director Johnson,
Director Johnson,
you're on mute. Oh, okay.
can we have, can you vocalize? Thank you.
Director Glee,
Aye.
Director McCreary,
Hmm.
Director Sites,
I have to abstain since we're the bank.
Chair Gilbert.
Aye. Okay, the motion passes. Good luck.
all right, Carolyn, thank you very much. Appreciate you coming.
Thank you.
Okay.
Okay.
Yep.
You
Good
don't
luck.
have to stay. Okay.
Next on the agenda is 25 LDC. 12, yes, 25 LDC 12, approving a loan to Wheelhouse Macklin LLC. Zach, this is you.
Yes, good afternoon, everyone. This request is a $300,000 LDC loan for Wheelhouse Macklin LLC. They'll be operating as Elevator, which is a co-warehousing space that will be located at 1230 Macklin. If you're familiar with the area, it's just south of Forest Park, kind of near the Science Center. They began their business out of Omaha, and this is an expansion into their 5th location and will be the largest location that they have so far. Joined with us today are owners Emiliano and Shannon Lerda, which I'll pass it over to them to tell you more about their business.
Thank you, Zach. Thanks, everyone, for your time. My name is Emiliano Lerda. I'm the co-founder and CEO of Elevator, and I'm going to pass it on to Shannon for her to introduce herself and also tell you more about what our business is all about.
I'm Shannon, and I'm a co-founder and president of Elevator. And our mission at Elevator is to elevate small businesses and communities. And I could really, relate to Caroline, to her first company, because she said she was operating out of her garage. And really, that is what we found ourselves in that same situation from 2018 to 2021. We were operating an e-commerce company from our home, selling pet supplies on Amazon. And we experienced firsthand the pain points of trying to grow and scale a business that requires inventory, shipping, receiving when you're doing it from home. And then we realized when we were looking for warehouse space that there is not suitable warehouse space that is small enough and on a short-term basis for small businesses to bridge the gap between their home-based operations to being on a long-term commercial warehouse or flex space lease. So what we provide is common area amenities. We provide month-to-month memberships for small businesses. We provide warehouse space, office space, meeting room space, and you know, the shipping and receiving is also in-house. So we have a loading dock and shipping and receiving for our members. We provide 24/7 access to the space so that small businesses can work when it's convenient for them, whether that be evenings or weekends. And then during the week, we staff the building Monday through Friday from 8 to 5. And we handle incoming shipments as well as we handle those outgoing daily carrier pickups from UPS, FedEx, and USPS. So we're providing ultimately very flexible, move-in ready, accessible spaces for small businesses to take a risk and hopefully grow. Open it to any questions, or Emiliano, if you have anything to add, please do.
Thank you, Shannon. No, I'm open to questions.
I was curious. I noticed that you've opened several locations this year. What's your plan going forward? Is that enough for the moment until you get those up and running? Do you have a 5-year plan to open 20 more locations? What's the plan there?
So right now we actually just had a board meeting yesterday. So we were talking about our number one priority and focus right now is execution. As you mentioned, I think Zach mentioned, this is our 5th location. We are right now joining you from Kansas City. This is our 3rd location. Our 2nd location was in Des Moines. That's doing very well, 64% occupancy. And we just opened in April. We usually model about 12 months to get to stabilization. And then we are opening a smaller location in Lincoln, Nebraska. So St. Louis will be, we're planning to open St. Louis in February, and that is going to be our biggest location and our biggest market. We're very excited. After that, as we stabilize, so we need to get to stabilization, which will be at the end of next year. And at that point, we're going to probably talk to partners to see, do we want to continue to grow? And if so, are there partners that are willing to invest in us to help us continue to grow? But the next stage, up until now, we were able to grow with small investors, individual investors. And if we wanted to go farther, we probably will need institutional partners.
No, I appreciate that. You pretty much answered my question. I was wondering if you were to take a little while to stabilize first. So it sounds like that's the plan.
At the end, yeah, hopefully, you know, we're planning to get to stabilization by the end of next year. So by the end of 26, early 27, we should have all 5 locations stabilized, and that's when we can then look to the future and say, okay, what lessons did we learn, and do we have the appetite, and is there a partner that has the appetite to help us continue to grow? And by the way, I think that question is also an excellent question, because part of what we're thinking too about St. Louis in general, your market is large enough that we could potentially have more than one location.
Okay.
So geographically, you have enough density that we could potentially open another location, which will be operationally, you know, advantageous for us. So it's something that we are interested in.
Thank you.
Are there other questions? Hearing none, is there a motion to approve?
So
So moved.
I'll second.
Okay.
I'll second it.
All right, moved by Director Seitz, seconded by Director Gleet. Will you poll the board, please?
Director Abu,
Aye.
Director Johnson, Director Glee,
Aye.
Director McCreary, Director Seitz,
Aye.
Director Johnson, Chair Gilbert.
Aye. The motion passes. Is there,
Thank you, everyone.
thank you.
Good luck.
Thank you all. Good luck.
Yes, good
Thank you for
luck.
Thank
coming.
you. Appreciate it. Thank you.
Next on the agenda is Resolution 25 LDC 13, approving a reinvestment of LDC funds in the RISE CDFI Contractor Loan Fund. Zach?
Yes, so as this title of the resolution states, this is a reinvestment of the funds that LDC had already put into the contractor loan fund back in 2015. As of 2020, Rise CDFI took over the contractor loan fund, and the LDC agreed to reinvest a little under 50,000 into the fund. So, given that this is typically or this has been a 5-year time as far as reviewing, bringing it back before the LDC board to continue that reinvestment into the fund, which Rise CDFI continues to manage. Happy to answer any questions that anybody has.
You'll remember there was a lot of investment, some from banks put in big chunks. There were several, because this was a total of a $10 million fund. So this is the remaining piece, I guess. We did it for 5 years, then we renewed it again. So this is re-upping for the next time. And I think with the needs for small business contractors that are out there, this is I think it's a good thing for us to continue this availability. Does anyone have any questions? If not, is there a motion to approve?
Moved. Director Abu.
I'll second Director Gleet.
And moved by Director Rabu, seconded by Director Cleet. Will you poll the board, please?
Director Rabu,
Aye.
Director Johnson. You're on mute.
Aye.
Director Gleet,
Aye.
Director McCreary, Director Sykes,
Aye.
Chair Gilbert.
Aye. Okay, the motion passes. Thank you. Next on the agenda is the status of accounts. Chris, you just sent this final out recently. You're on. I can't hear you, but it doesn't say you're mute, but I don't see it. Anybody else hearing Chris?
No, Chris,
No.
you're still mute. If you want to come in my office and present, you can.
Huh,
Can you hear me? No.
now we can.
You can?
Yeah.
We can. You're not
Okay.
very loud, but we can hear you.
I'll speak really loud. How's that? Can you hear me now?
Okay.
All right.
Yes.
Okay, so the financials that you have in front of you are for the month ending October 31st, 2025. We had a significant increase in our revenue because we closed an SBA loan, so $10,742 in revenue. You'll see the expense go up because we paid for some legal fees for that SBA loan closing, $3,500. So we had net revenues of $7,200 this month, bringing our ending fund balance to $77,000. That's still in the red, but it is moving in the right direction. We closed an the SBA loan for $411,000. That brought us in the additional revenue. We did close another in-house loan, Crossroads, but we did it in September, so it didn't hit the report, but I wanted you all to know that we did it. We have a portfolio of 59 loans, quite a bit under 10 million in principal outstanding on those 59. 39 are the in-house type, the type that I actually write checks out or wire money for, and 20 are SBA deals. Principal of those two are over to the right there. The other one that I didn't include in the portfolio are the new tornado relief loans that we're doing, the $5,000 deals. We've done 26 of those. There's a few more I think that will still be funding, but we won't come
we won't come even close. I don't know, we won't get to 10% of the dollars that you laid out, $2 million for that program. And I don't think we'll get to 200,000. We won't get to 200,000, but we're available. We made them available. We've gone through, we've run into real problems with CBI clearance and having current on their taxes and current licenses. So that's a big issue we ran into. Our portfolio, we have 4 loans that are delinquent. Of the 4, the principal that's outstanding on those 4, $506,000. If you look at rates, if you look at loans to outstanding, loans delinquent, it's 6.78% delinquency. If you look to principal outstanding to principal delinquent, you're at 5.23%. I have tracked for you for quite a while, since 2001.
I want to walk you some things.
2001, 96 loans that we have written. This board have come to the board and we've written off for non-performance.
Okay, I am on mute. Okay. You want to come get some guys sodas or candy too? The cooler water, Pepsi Cola.
Somebody needs to mute.
Pepsi Cola and water. Oh, okay. Because I didn't. I'm gonna tell you, look at the cooler when you.
Okay. So of the 96 that we have written off, with a little over 5 million in principal that we wrote off. But as we do say to you, we do continue to try to collect. The kind of collateral that we have is very important. On the 96 that we've written off, we've actually collected some or all of 41, 21 we've collected in full, and 20 loans we've collected partial. 1.2 million in loans collected. So your actual write-off since 2001 is 75 loans at $3.8 million. That's the principal that we've lost. The aging is at the bottom of the page. It's just a total of 59 loans, 55 are current, and 4 are delinquent. Your second sheet is just a picture of the financial statement, and it shows you that negative number there, that 77,000. But if you look right above it, you'll see that we are moving in the right direction. We've had 20,000 in income. We started with an 87 in the red, plus the 10,000 that we commit, the 30,000 overall. 4 months, it's $10,000. So your net right now fund balance is a negative 77. That's what I had said on the previous page. That's just a picture of the financial. The next 2 pages are the funds that you all have, that you all administer, that we loan out. And we have 4.5, getting close to 4.6 in dollars in the bank to lend out. The tornado recovery is a program that we committed to in July, and you actually committed $2 million to that. We've only given out 130,000 of that, so the 1.87 is still available. As I said, I know we won't get an additional 70, so you'll see well over 1.8 million coming back into available funds to lend. You committed 1 loan today to Elevator St. Louis, 300,000. So even if all the tornado recovery money was spent and the loan that we approved today, you'd still have almost $2.4 million to lend, and really you're gonna get back close to, you'll get back 1.8 in addition to the 2.4 that we have available. And that next page just breaks down where that came from. It's all from repayment programs, whether it be the active COVID repayment program, the EDA, I call it EDA repayment program. The EDA loan program, the repayments on that is the 2 million, and then you got the First Bank and the Metro and the defederalized money that became the LDC revolving loan that we just mirrored the EDA program, but we used it with local dollars. And the UEL program, that's an old program that came from the state. But all those monies available. As I said, you have 2.3. If you lent out all the tornado money, you won't do that. So you'll have over $4 million come the end of when we pull back the tornado money. The next three sheets is the actual delinquency report. We have on the CDBG, the old CDBG lending program is not a program that exists anymore. We don't get block grant dollars to lend anymore. But that's an old, as you can see, 2003 city design loan that was making very small payments and asked for a moratorium. He didn't provide what we asked them, so he just stopped paying. I think we've had some contact with him, but to be honest, I don't know that for sure. The next page are the in-house non-CDBG loans. Better Weekdays, CMT, and Earthbound are all loans. All four of these loans were on the report 2 months ago. So it's just an additional 2 months that they haven't paid. I did make this comment about Better Weekdays last time. They're not paying, but according to the terms of the loan, they don't have to pay. That their incentive to pay decreases. We encouraged them by incentives that we gave them to pay earlier, but we gave them till 2029 to pay the loan in full. So I don't know if it's the board's wish that I continue to show that, because like I said, technically, or I'm not being a lawyer here, but legally, I don't think they would be considered delinquent until after 2029, but wanted to show you that they have not taken advantage of any incentive that we gave them to pay.
Are we getting any reports from them? Any numbers so that we know what's happening?
I do not have any reports from them, but I'm seeing Linda Bierman, and I'm wondering if she could answer that.
We have not. The owner had filed a personal bankruptcy, and we were kind of letting that play out, and we can follow up with him now, I guess, and see where he's at. But
I think we should just keep in contact with them and see what their status is. I mean, are they going to be able to pay anything before 2019, or even are they going to attempt it?
Right. We can follow up with him again and see where he's at. Like I say, after the bankruptcy, we just weren't really sure what he was doing, so we'll follow up.
Thank you.
And the final sheet, I always like to go over that. That's the SBA program, and all 20 of those loans are current.
Thank you. Are there any other questions for Chris? Okay, thank you, Chris.
Thank you.
Let's see. Next on the agenda is just an update on the 504 program and other loan activity, including the Tornado Recoveries Act. Do you have anything to add?
Yes. So as of right now, I'll start first with the Tornado Relief Loan Fund. We have 35 loans that have either been funded or are set to be funded, which is a total of 175,000 there. There are 15 more that are awaiting CBI clearance and missing documents. So that roughly would equate to 75,000 for that. So potential of utilizing 250,000 depending on if those move forward. To kind of give an overall, there was 119 applications received for the fund, and we are no longer accepting new applications at the moment. So that 250,000 would be the maximum that would be funded if everything is cleared out for those remaining 15 loans. Moving on into the other programs. So as Chris mentioned already, we had 2 loans funded, one 504 and one for Crossroads through our revolving loan fund. As of right now, we have now 4 in the approved status that we're working towards closing. That's 3 504 loans, and then the one that was approved today for Elevator. And then we have 2 more that we're trying to bring to you all in the next hopefully coming months. So that would be about a little over $1.5 million, and then for the closing, it's about a little over $2.5 million for that amount. Any questions I can provide to anybody or answer for anybody?
Do you think any of those will be ready by December?
I'm not 100% sure, and kind of we're dealing a little bit too with the government shutdown, and now that that's reopening, trying to adjust. Part of with SBA submissions and things like that, we have to deal with trying to um, uh, deal with any sort of stale documents and things like that. So we didn't want to be too overzealous and have those documents go stale, since this seemed like it was going to be a long time. So we've been in the process of getting updated documents, and I'd like to say that they would be ready in December, but I'm not 100% sure on that.
Okay, thank you. Connie, you had your hand up.
Yes, I just wanted to know, like, now that the tornado recovery, that part is over, will we be issuing out any statement letting people know what we did?
I'm not sure I can answer that. I don't know if Chris or Linda, do you guys would know about that?
I think we probably need a
No.
couple more weeks to finish everything up and kind of see what our final numbers are looking like, but
Then I
But-
think we can maybe report up to SLDC, and then their communication along. Everybody seems to be trying to be on the same page. So we'll get with the mayor's office and have whatever announcement is made will be approved by everybody. I know Dion's on the
Right.
call. He may have some ideas, but it just seems to me once we've gotten it, as Linda said, finalized, we got this last 35 jumping through the hoops, then we can do something. So I think there was a lot of interest in, the loans and the things that were made available. So we should say something.
Yeah, I just feel, I want to say it, not sound self-serving, but I think what I'm trying to get at is that we responded, that there was an imminent situation here in St. Louis, i.e. the tornado, and as an organization, we responded. When you hear so much of they're not doing anything, they're not doing enough, I guess I want to say, can we take a victory lap, if you
Yeah.
will? I'm sorry, I need some more caffeine. I've not had enough today, so I don't have a filter right now, and I'm not going to talk, but that's what I wanted to. I just feel like people should know, the work that we did. That's all. Or
I
the work that
appreciate
we
that.
do. Yeah, yeah.
And I think we'll follow up on that for sure. Any other questions or any other business to be brought before the group? Our next regular board meeting is scheduled for Thursday, December 13th, and our review committee meeting, we talked about trying to do that December meeting in person if we have business to conduct, because we talked about trying to be in person at least 2 or 3 times a year, just because we miss, I think, a lot just being on Zoom. So we'll see what we've got to do. And then if anyone there gets an update on Don and can share it with us, we would appreciate that.
Sure.
If there's nothing else, is there a motion to adjourn?
So moved. Director Gleat.
A second?
Second, Director Review.
Okay, it's been properly moved and seconded, so we are adjourned. Thank you, everyone.
Thank you.
December 11th is the meeting.
All right.
Happy
Thanks.
Thanksgiving.
Happy
Yes.
Thanksgiving.
Bye.